I dance, make it hurt.
What's up, Relentless Traders? It's your host, Surreal.
And Juan Gar, and welcome back to week 4, episode 4.
Episode 4.
Yeah, another tough week in the market, wasn't it?
Bloody week in the market.
It was fun to see for sure. I mean, it's definitely something a lot of the newer traders are experiencing for the first time.
Yeah, and us too. Came in, seriously right after that March 2020 crash, and that led to me learning technicals and stuff. So I had just missed all that drama. But I mean, that was a rip straight off the lows, and I just don't see that happening up here after this big long run we've been on. So it's definitely it's definitely a learning process for a lot of new traders for sure, including us.
Definitely. And we saw a couple, towards the beginnings of the days, we've seen like the rips. And
Mm-hmm.
everybody's like, "Wow, we're gonna go long," and then they trap the liquidity up there and they just sell off the rest of the day. I think
And
it was Thursday that we had like a 12-point swing on SPY. I think we were up like 4 or 5 points, and then they just sold it off for like a 9-point down day. It was absolutely insane.
yeah, and I think what happens too with traders and specifically like depending on what your time frame is, you can let this type of environment get you very discouraged, especially if you're holding on to losing positions, and then you can see how that makes people want to look away, right? You just want to shut the accounts off, or you don't want to show up, next week to trade, or you don't want to look at the losses that you're holding on to. If you identify as that type of person, then you really need to look into risk management and look at how losses work geometrically against you, because you got to remember nothing can bring you down as long as you're not holding on to it. So if you cut those losers early and quick, keep them under 10% or better, lower, you're not going to be caught in downdrafts like this.
Yeah, definitely. And I think also the itch to really put on a trade just when you shouldn't be.
Yeah.
Especially as a newer trader, I know, we're used to seeing something rallying hard and maybe putting on the trade or, getting bailed out by the market, even if we FOMO trade into or we FOMO enter into something. This is not the market. This is not that market anymore.
No,
As we've
you're
seen the
not going to
past
get
couple,
bailed
yeah,
out.
they're not getting bailed out. Nobody's getting bailed out anymore. I mean, we saw the past couple of days there was a lot of traps both ways. I mean, yeah, honestly, the market has been playing a lot of games, and the purpose has been to trap the liquidity, both long and short. I mean, we've seen it. We've seen the huge swings up and down. And it's very hard to capitalize on that if you don't have a present edge and a clear setup with clear intent and clear rules.
Yeah. And I think we're going to talk about that later too in our topic of surviving towards the end.
Definitely. We're gonna dive really quick into our end of the week review. Mine's gonna be a little bit quick this week, but I know Brandon has a couple nice trades he took if he wants to walk us through that, surreal.
Sure. Yeah. I'm going to switch over here.
Yeah.
Here are my
Let me
charts.
look into that. All right.
So, sorry, this chart's a little bit messy on the daily here. On the intraday on the right side. So I wasn't looking to trade this week because had some real life stuff going on, but I was still watching the markets all day and in the morning. It's just kind of multitasking. So I wasn't looking to get aggressive. I was having that situational awareness that I had external factors going on, and it was going to be kind of tight if I wanted to trade this week. So you got to really think a couple days ahead and say, what do I have going on in real life? And then, don't have expectations that you're just going to be able to show up and quick hit trades or try and fit too much in one at once, if that makes sense. So really like think about what's going on the outside in like your real life, and don't allow yourself to just try and force trades, just because you come and sit down at the desk or something and you got a couple minutes. So you really got to balance your life. And so I knew I had some stuff going on this week, and I was like, okay, I'm not looking to be too aggressive anyways, because I know the market's in a really bad spot, especially after the open on Tuesday. So I was kind of keeping that in perspective with my situational awareness as a whole and saying, okay, I'm not looking to get aggressive, but if something presents itself, perhaps I'll go in with some small size and a tight stop. Because, like you were saying, Juan, the volatility both ways, right?
Yeah, definitely.
And so I was focusing on my three setups, which just happen to be long. One of the setups is a variation where I can use it on an intraday time frame, both long and short. And as we discussed last week, I've been really trying to focus on these tight entry areas. And so I wasn't looking to go short at all this year. I really wanted to focus on my three long setups, study those, work on those. But the setup in the indexes just looked too good. Like when the indexes started rolling over on Tuesday, you remember one I kind of documented in our little Discord journal. I was like, I think price is pinching here, and we could make a big move this week. And we just the bottom just started falling out day after day.
Yeah.
Um, so Thursday, yesterday, I was watching Ford, and it seems like they had started to narrow out these stronger stocks. Ford has been holding up and made a great move. I've been eyeing it. You know what I mean? I was wanting to take it long in case we got a rally in the market, but we didn't. And then eventually it started selling off. So the market started identifying where people were hiding out in these strong stocks, and the market just started to come in and just and sell it off, right? And so once that selling comes in and everybody's in there, you can see it's just straight down. It gives back all these gains and this whole range that it spent time building, and it just gave it out. Well, Thursday, I was watching and I had missed this big piece. So I was like, I can't really get short down here after a big, long, extended move like that. So I was patiently waiting, and I watched us open up. We came to a resistance level that I had drawn. Um, and we tested that in the first 15-minute candle, and I wasn't looking to take sorry, over here on this day, Thursday, we ripped actually on Thursday, the day of the entry, and we came into a supply area from the previous day. And so I was looking for a tight area because I had a negative bias for that day, and then the market actually rallied in the morning, and then weakness came in, and that's what I was looking to do. I was looking to fade that strength, and I saw the tight entry. That's what drew my attention and really made me want to take this setup, um, which is a momentum burst to the downside. So once I saw this tight candle come in, I took a very, very, very tight entry. I had a stop somewhere here in the 2270 range. So really only what is that?
Like 13
Uh,
cents.
13 cents. And, and
Yeah.
and it was just more so a trade because I wanted to get practice with these tight areas because they work both for long and short. And so I kind of was upset with myself, Juan, when I told you I wanted to focus on my long setups this year and I wanted to sit out and be patient, but
Yeah.
this one was too juicy. And I felt
Yeah.
really bad about it, cheating on my three main setups. But I said, hey, this is looking tight here. This is a tight entry. Like, let me try this out. I was already having a bias against the fading the strength, off the open, and I wanted to get in on that weakness. And if we look at the daily, sure enough, it sold off into a shooting star. And from there, on a 13-cent risk from my entry, it would put me right into profit. I covered a little bit here, just a little bit to get some in because in these markets with the volatility both ways, you got to be a quick hitter.
Yeah,
You can't be
100%.
you can't be holding for swings and extended moves, especially after it had been down so much the previous day. So I had that in mind, that I was looking to take some gains. So I actually went short here with about 500 shares. I took half off. I covered 250 on this little pop here, and then it just continued to roll over from there. So it had nice continuation. So I was holding half with a good cushion here. So I said, well, if it gaps up or whatever, I had this previous open to go off of. I said, well, tomorrow, if we go lower, I was watching it after hours too, so there was some continuation. I said, if we do try and run the next day, it shouldn't get above here, or I would cover some. And as we can see, from this previous 2144 level, which I took off this previous significant high, that's exactly where we kind of rallied to on the open.
Yeah.
And I didn't get faked out into covering at the top, right? I said, well, hey, if there's going to be weakness. So today, it rejected that 2144 level. We got a nice big shooting star off the open on some good sized volume down here. and then we got some follow through, and I just kept covering pieces down here, all the way down, and then I had a last little small bit that I covered on this squeeze here, when the market squeezed, and that's just a perfect example. One, like you were saying, volatility both ways. When you're going short, your timing has to be perfect. You have to get into stocks that are showing weakness and showing a possible setup, and you've got to get short on those first day or two of major selling. If you're trying to get short after an extended period of move of one, two, three, 3 big days of selling, you're too late on the short side. It's already extended, it's oversold, and you're gonna get these bounces, and they're gonna take you out. So timing, that's one thing I got out of shorting, very important. So I covered most here when the market rallied and had that little squeeze after the open today, and that was a pretty good trade for me on the short side.
Nice. What was your thought process really going into, I think we've spoken a couple times about kind of swinging overnight, and how like how that could be a little, a little iffy, just how the market's been doing its liquidity traps left and right. Just what was your thought process going in with your half your position size into today from yesterday?
Yeah, so I was definitely itchy to get the size off. I think if you have some decent size on, keeping the market conditions in mind, I had such a tight stop. That's why I went in with more size for my account size, 500 shares. That's because I kept that tight stop. So that's why I went in with a bit more bigger size. But
Yeah.
I took half off very quickly to get some profit. So if you think about that, by me covering some here, that kind of allows my stop some more breathing room if I wanted to play it for a bigger move. Or if it starts to come against me very fast, then maybe I can, cover the rest at break even. So by taking, 50% off, 80% off, can have a tight stop, you can go in with a little bit bigger size, and you can take a bigger amount off quicker, because again, in these markets, that's what I was thinking. I'm like, hey, I'm not trying to hold for I didn't want to hold this for another day actually, but it was showing me so much follow through that I was like, you know what, I already took half off, I can see this potentially following through.
Yeah.
So that's why I did hold that the rest of that overnight. But as you can see, my anticipation was right. We got some, in these bear markets, you get retail or shorts covering, shorts getting faked out on these counter rallies in the morning. But a bear market, you're going to get the follow through to the downside as the day goes on, and you're going to get the sell off.
Yeah.
But keeping in mind that the market can only sell off, sometimes so far, and we never know when that counter trend rally can come at any moment, like this during the middle of the day, where you just get a shot of buying, short. This was definitely a squeeze because I was walking my shortstop down here, my buy shortstop.
Yeah.
So, I'm just walking it down because I know, hey, we're already 3 days down. We're super extended past the 50. Like I know where it's headed. I'm just looking for that, trying to follow it closely until the market reverses and takes me out, and I'm good, you know.
Yeah, and like you
So
said, working on those entries too, because anybody who got short, like for example on Ford towards the end of the day there, those are the people that got squeezed there at the beginning of the day,
yeah, totally.
because they were in profit, and as soon as those stop losses start hitting, the sellers
Yep,
become buyers, and then
yep,
the buying ensues.
yep. Until it exhausts, and then it flips back the other way.
Yep.
so that's the name of the game, is the timing. Going into my second one here was Netflix. They, had a terrible earnings report. I mean, the thing gapped down from, 508 and opened at, what is that, roughly 400. So 108 points down in after hours. That is an insane gap. That is huge. So I had a bias to go long on this today. I was looking for a long. Uh, I was waiting for the open to come out because I'm noticing more, like, I don't, the first 5 minutes in a bad market, you never know which way it's going to go. So it's better to just kind of wait. So
Stay out of it.
while,
Yeah.
yeah, while I was handling my Ford short, actually, when I was covering on Ford down around the same time, I was kind of eyeballing Netflix off to the side, and I saw it started putting in higher lows and was holding up well relative to the rest of the market. So once I saw a tight area here on the 5 and in conjunction with the 15, I took a nice entry here on this candle. It pulled back a little bit below my entry on the next 15-minute candle, and then I started seeing good follow through, and then a huge move up back to after hours levels that I had marked here. Some significant ranges here, and then this level here where it opened. So I was watching those levels, and as you can see, it respected them really nicely. I was better off just selling some into the strength here after this big long extended move. But because it pulled back, I was looking for a bigger pullback to see if it would consolidate because I was hoping that there could be a big short covering before the weekend. So I was like, if this thing can clear 410, you know, I mean, it's got,
That's a
this is,
that's a liquidity pocket, right?
oh
That's a
man,
volume pocket. That thing, if
this
it
thing
pops
could have
in there, it could
exploded.
blow. Yeah,
Exactly. Yeah. So I was like, if this can clear 410 and it started flagging here and consolidating nicely and getting tight. But as soon as I saw that consolidation break to the downside, I said, nope, I'm out. I'm taking my profit. That was huge. My stop was literally a dollar stop on this. So I got in at 385.92 and my stop was 384.92. So,
yeah,
you know,
that's a really tight stop on that for sure.
I went in with a very small position,
Uh,
25 shares, not nothing huge. So I was risking $25 and I came out with like, 320 or something like that.
it's
So high
amazing risk
price,
to reward.
if you get the entry right on these high price stocks and your account, has enough to get a good amount of shares, you can, when you catch the right setup, if you have a setup, you can catch some explosive moves in this volatile environment. So that was a really
Definitely.
good one for me, and it brought my account back up as you guys saw on the screen, the screenshot. Um, it brought my account back up out of the drawdown, in two trades. So I'm almost break even on the year now, and I was down 8%, almost 10% on the year. So
That's sick,
I'm
man.
not, yeah, I'm not looking to get aggressive. I'm back to break even, and I'm looking to be more patient for these conditions to improve.
Nice, man. Congratulations on those good trades this week.
Thanks, I appreciate that, man. It was
I
it's
mean,
been a
I know,
crazy time.
yeah. I mean, I know, obviously we know from personal experience that having those drawdowns really does suck, but you can't let them really deter you from taking trades and continuing to put risk on when an opportunity presents itself.
Yeah, a low risk one too at that. That's the biggest thing.
Definitely.
Yeah.
So, kind of going into my week, I actually did not take a trade this week. It might have been the first week in over a month I didn't take a trade.
Okay.
Lots of short opportunities, but it's not something I'm currently very comfortable with. I'm still kind of in the background working on finding those low risk opportunities where I can get long and scalp these moves quick. I think going again back to like the whole day trading stance, people talk about day trading. It's like, oh my God, like so many things are moving. Why aren't you trading? There's a level of comfort that I like to maintain at the moment. Just because it's not just me, but everybody else, is struggling with the market, and I don't really feel like blowing up my real capital and my mental capital trying to take trades left and right.
Yeah.
So I stayed away and I watched the dumpster fire, burn.
I think
Um,
that's totally fine and it's smart, man. Like you're you're being objective and you know your strengths and you're playing to that, and that's a position. That cash is a position.
yeah, I mean, and so far it seems like it's been king, unless you're
Hmm.
like you said, for example, you had setups for the short and all that stuff. If you, I didn't have anything present itself very clearly to me. I couldn't get a good read, and I decided just to stay away. But I was here every day too, though.
You were.
It's not like I stepped away. I work Pacific time, so we get up at 5:30, 6 a.m.
Hmm.
to get ready for the market open and all that. And I like to be able to see what's going on. And if something were to present itself, I'm not against taking the trade. I am a more risk adverse person, so I'm still working on the confidence in entering. But the, this week was just not it for me. So I decided just to, just take it chill, watch the market. Like I said, watch the dumpster fire. I honestly, kind of had fun watching the market dump just because it's almost like I have biases going into the day, and it's really cool to see things play out that you expected because of X and Y.
Right, right. When your
Um,
analysis is
yeah, when
on
your
point.
analysis and your situational awareness is spot on, it feels really good to watch something play out. Does it mean you should take a trade on it all the time? No. It just means, it just means your situational awareness is exactly where it's supposed to be, and you know where you are in regards to that.
Yeah, that's so true, man. And that's growth and that's experience speaking right there. You're instead of some of these guys like you and I've been seeing on Twitter and like in other discords and stuff. It's like people are just holding on to losers, trying to buy bottoms, like chopping themselves up if they are using stops because they don't have a setup or an edge in this market. And even if you're someone who has an edge in this market, like even good traders, who know their edge well and know their setups and their strategy, it's like even their gains are going to be marginal, because it's just so volatile up and down. It's like how would you expect, anyone to survive that? You know what I mean? Especially if you don't know what you're doing and you're new. So
100%. And I think that kind of really leads us into this week's topic. So, Rio, if you kind of want to just, you know, explain a little bit about what we're going to talk about.
yeah, I think it's relevant, like we try and keep every topic every week. Just surviving as a new trader. If you just started recently or you're just getting into the markets now, I don't know why you're a little late to the party, but if you're just starting out or you're new or you're like us and you've been trading the past, year or two or three, and you're newer in that sense, I think survival right now has to be your top priority. I don't think I don't think looking away from the market is a good thing. I don't think turning off the charts is a good thing. But don't let the lack of opportunity or you making mistakes right now, don't let that become your identity. Like, don't attach that to like how you are as a trader because you can't. And if you understand that you have to have an edge and it has to be present in the market, um, then you begin to separate yourself from what the market's doing, right? And then, like you were saying, you sat out this week and you're totally fine with it. Like, it's still kind of tiring because we get up every day and we watch the market and we're here, even if there's no setup, so we can learn. But we are aware of our edge, the setups we use that show us when to get in the market to take these trades. We're not just randomly taking trades; like we have patterns and scenarios that present themselves in the charts, and then we try and keep our awareness with what's going on in the market, and then we place our bets accordingly. So
Yeah, I think
having
that
yeah
that kind of leads us into the whole having that present edge, and it's something that you and I are very thoroughly working on. Like you mentioned, the whole forward short, and you felt like you were cheating on your long setups. It's if you've seen a pattern play out over and over and over again, and we've seen them work, right, since December. I mean, since late November, we've been seeing these patterns play out over and over and over again. I mean, so
mhm,
much that we're almost pointing them out on a day-to-day basis now in certain stocks. We're not taking trades on it, but we've been pointing it out to each other, just taking the screenshot, be like, look, this is where I would enter here, this is where I would enter here. And it almost kind of like re-ingrains those in your head. So when you saw the
100%.
opportunity on Ford, you weren't just YOLOing or FOMOing, you know what I'm saying? It's like, look, I can keep my wrists tight. Market's rolling over. Ford was showing strength, and now it's not. Let's make an attempt here, and that's
Yeah.
exactly what you did, and that goes to show, very very good both risk management, situational awareness, and discipline.
Man, that sounds so good when you say it. I appreciate it, man. But
Yeah.
it's a difference between for newer traders too, I think, and even for me. Like I feel like I'm at that point where like things are starting to become a little bit more clear, especially in these tough environments. And just having that like awareness, to know where you're at in your experience. You see these other people hindsight, you see the trades they took, and you're like, oh my God, like, yeah, it's plain as day, enter here, get out here. But like it the real money is made and the real progress is made is like in the execution. So you have to be aware of where you're at. You have to ask yourself, hey, do I know a repeatable pattern or AKA a setup? Do I have something that tells me when I'm thinking one way and it allows me to get in to define my risk and say I'm getting out here if I'm wrong, and I'm looking to take profits at a multiple of that, right? And then actively managing that as the trade is playing out. So not everybody's going to be on that same level of experience and execution. So you got to know, hey, like if you don't even have a setup right now in this kind of market, how would you expect to make money? The market's going up and down every day. People who have setups and have an actual edge and know when to get in, um, like even they're having trouble. So if you're not going in with a plan or you don't have an edge, and even if you do have an edge, then knowing when it's present in the market and how strong it is, you can see how that fluctuation of your performance is going to be very hard right now in this type of environment where it's selling off hard and then it's squeezing shorts out and then it's rolling back over. So you got to have an edge, and then you got to start getting awareness with where you're at and how well you're able to execute that edge because it's going to look different in different environments.
Yeah, and I think it's important for newer traders also, much like we are, putting in the study time. That's all I did this week was watch charts, look for entries, even if I wasn't taking a trade. This was something I told myself before every market. It's something I have written, literally written down, printed out in a paper right beside my keyboard. If I don't have a setup for the next day, I'm not taking a trade. If I don't have something I previously charted, I'm not taking a trade. And that's completely okay. I'm fine with that. Even though some people might be like, "Oh, there's so many opportunities." Not for me. My edge wasn't present, and for me, it wasn't there. But I'm still here, putting in the study time, and I think it's so important to put in that study time, just because this market hasn't been easy to trade in, and I think it's now more important than before to be able to put in that study time, because if you can learn to trade in a market that's difficult, then I my assumption as a newer trader is that, when we get into that bullish market again, into that bullish bias, and people keep buying the dips and the market keeps going and making all-time highs, you're just gonna be killing it.
I think you're right, and I think you're not it's opportunity cost there too because me, I have always a million and one things I want to do with improving myself and my process and my strategy. Like I'm like, oh, I want to read this book, but I need to like do this. I need to do this back test on this, one of my setups, and I want to get like thousands of chart examples, and I'm trying. So like me, I always have something on my plate to try and do to get better, but it's opportunity costs, right? Like what's gonna benefit me more now? Like and ask yourselves this too if you're listening to this as a trader, like what's gonna benefit you more right now? If you're not making progress equity wise on your account right now and you're losing money, wouldn't it be better to just go focus on one thing that you've been doing well before in a bullish market and just study the crap out of that and get good at it in a terms of like studying every nuance, trying to make rules, creating a database with the pattern so you can study the pattern every day. Like instead of just chopping yourself up right now when the market's not good, like you're not going to miss anything when the market turns. Like if you're watching the market every day, that's great. You're learning, you're watching the market move and seeing how the price action is, you know what I mean? Are we continuously selling off? Are we bouncing? What do other stocks look like? Like you can do that during the day when you would be air quote trading, but also, if the market's just crap, watch the indexes, pick a couple stocks to watch, and then just on the side, like be working on your strategy, work on your edge. Don't let the opportunity, like you have so much opportunity right now to study and get better because there's going to be another bull market. And when it comes around, how much better would you be if you had just studied instead of just doing damage to your account right now and learning through trial and error when there's not even good setups out there to the long side? Like, you know what I mean?
Yeah, and it also goes back to the I mean, I think it was you who told me about how many hours do you need to put in to master something? Was it like 10,000 or 5,000?
10,000 hours.
It was 10,000 hours, and every minute that you can. I'm not saying you have to force it. I'm not saying you have to, give up your life for it. But if you're already in the market, then why take the day off? You know what I'm saying? If you have the opportunity to put in the study time and look at the stocks that you want to master and look at the setups and learn the setups that you want to master and all that, why not put in the work while you're already here?
I love it, man. That's what I'm all about. I love that. Yeah, and
Definitely.
it's everybody wants it right away. Like I remember like I put so much pressure on myself in 2021 because I said I want to be a seven-figure trader. I want to be an eight-figure trader. By the end of the year, like what? With a small account, like I was expecting that, right? And you can't expect that. Like you need to aspire because when you have an expectation and it doesn't happen, then you like it's like you let yourself down or you failed, right? And you can't look at it like that. You can aspire, you want to aspire those big things and work towards them, but don't put that expectation, that pressure on yourself. You know what I mean? Because when you aspire for something, it gives you that it's okay to fall short, especially when you have super unrealistic expectations, right? So switch your expectations to aspirations and then create procedural goals, a plan to work to those aspirations, you know? And so it's truly not a sprint, it's a marathon. Like this takes time to learn. And you're never going to stop learning in this game. Like you'll get better. You'll get better at executing if you don't blow up first and you can stay in the game long enough to find an edge. But you don't have to be a millionaire tomorrow. Like you should work like that every day for sure. Like we both put in hours and hours every day in the market. Anything traded related, we're all on it, you know.
And we spoke about it. We spoke about it very briefly the other day about just being here in general and how many people put in that study time and that work.
Mhm.
And it's literally just about showing up and putting in the it's not about practice doesn't make perfect. It's about perfect practice. So like you can't just show up and stare at charts and hope for the best. You have to know what you're studying for, what setups you're looking for, and the best, organize yourself, write some things down, and it's typically what I like to do. It's typically how I process things better. I like to have things written down and start checking them off. It's how I feel I've accomplished things, just with a check mark on a piece of paper. Um, so I think it's just important to keep that in mind.
Yeah. Yeah, it truly is a marathon. And even if you miss, and we said this too, if you miss that one stock that just happened to rip while we're in a bear market, think in probabilities, right? What are the if you keep trying to go long in this market, like what's the probability of a stock making a big move to the long side and you catching it and getting the full piece? Like the risk is just not worth it, in my opinion. you know?
Yeah.
And so take your time, man. Use this time to study. Study the market, what it's doing right now. Take good notes. Like, what did the market do this day? What did the market do this day? What did the market do this day? Take solid notes on it so that you can let the market teach you. And also, if you have an edge or a specific setup, really study that edge right now, especially if it's not working right now. Instead of trying to force it on the market's telling you, hey, it's not your time. It's not your time for your strategy. So just study, and it will pay you off 10 times more than just taking losses right now for no reason.
Yeah,
And if
and
you,
this is that career too that we also spoke about, that it's not like a corporate ladder. You don't have to wait your 2 years to advance. This is I mean, when you get going, your performance can get parabolic very, very fast.
yeah, once you figure out that process, man, the the potential is infinity. So, I mean, your hard work is not going to directly, show up in your P&L right away, but I mean, that marathon of experience is going to stack over time, and eventually your worst level of trading is just that floor is going to keep rising, and your upside is just going to expand. So you got to just understand that. You got to realize where you're at within your journey. You got to know that if you're managing risk, if you're keeping your losers small, you will survive, long enough to find an edge and to get better and become consistently profitable. So don't give up. You just got to focus on the right things. You got to focus and study and survive through this bloodbath right now because we don't know how low we're going. We're taking it day by day and we're watching the market. We're letting the market show us. So
Yeah.
survive.
100%. I mean, that's the goal always. That should always be everybody's goal. Take small losses and let those winners work for you. And unfortunately, there's not a lot of winners right now. So just survive.
Yeah. Yeah.
So I definitely think we can call it there. I mean, this was definitely a quicker one, but I think a lot of good gems in just in general
Yeah.
to keep track going forward, especially with the amount of selling we've been seeing on the market.
Yep. Great discussion, and we're gonna we're gonna keep on keeping on every week.
Definitely. So I think we can call it for week 4 there. And we will see you guys in week 5.
Yep. Thanks, guys. Remember, manage your risk, stay focused, and be relentless. We'll catch you in the next one.
See ya.